Disclaimer: this is not financial advice. The chart is pretty much self-explanatory. The time frame on the weekly and the starting point of all cycles is their respective tops peaks. We didn't distort any cycle, all are just a way given by the bars pattern on their log scale. The orange trendline represents cycle 2223, the black trendline represents cycle 1821, and the blue trendline represents cycle 1417. As you see, their alignment during their bear phase of their cycles is remarkably tight, as they don't diverge by as much as one would expect. With the use of the Fibonacci levels, taking as Fib 0 the bottom of the 1821 cycle, we can designate two buy zones. The first one within Fib 0.38 to 0.23 and the ultimate within Fib 0.23. As you see, the current cycle made a bottom and bounced just over the ultimate buy zone. What's really interesting is that the 1417 and 1821 cycles always converged after a divergence, which simply indicates the standard nature of the course of each bull cycle. We have to mention at this stage that the big divergences of the 1821 cycle was first on the April-June 2019 rally due to Facebook's Libra enthusiasm, and second September-March 2020 due to the massive money printing and rescue packages to stimulate the economy from the COVID lockdowns. We have also incorporated the halvings, and as you see, the symmetry is astonishing as all there are within a 2-month range. This is just another demonstration of cycle stability. Keep in mind that the halving events are major cyclical events for Bitcoin as they cause a supply shock, thus stimulating the demand. It is no coincidence that the phase of the parabolic rallies has always started after the halving. As for the projected peak, since every cycle offers diminishing returns, the peak is lower each time. The 1417 cycle peaked on the 2.6 Fibonacci extension, and the 1821 peaked on the 1.6 Fib. The next range in line is approximately within $100,000 to $132,000.